Hello and welcome to the Hyperion Driver-Based Planning tutorial. In this lesson we will talk about special revenue drivers in the Hyperion application. Special revenue drivers allow you to take another account and either pass through the cost or mark up the cost for invoice to a client. There are two special revenue drivers which we will cover during this tutorial: pass-through and cost plus. When working with special revenue drivers, it is recommended to start with a blank Excel file and connect to the Hyperion server to open several web forms. This is so you can see the interaction between them when making changes or edits. To do this, you need to go into SmartView's task list and then open the standard revenue web form and the standard expense web form. These forms will be named Standard Revenue and Standard Expense. Now we will configure our first special revenue driver. Go to the Special Revenue Drivers section of the task list and open the web form for Create or Modify Pass-Through Revenue Drivers. It will also be useful to open the Input and Adjust Calculated Values web form to review our results later on. A tip for when you are working with multiple web forms is to pick the planning cost center you are going to work with immediately after you open the first web form. That way SmartView will use that same planning cost center on any additional web forms you open during the same session. There are two main driver types for pass-through revenue. Type 1 is where you define a special revenue driver based on an account value, and Type 2 is where you define a special revenue driver based on another account's quantity. For the first type, we will take an account, Travel and Entertainment. We will give it a P of 1. The P refers to the driver rate, which is the same as price. And then we will also select a markup. In this example, I use 100% as the markup, which will pass through the account value without any change. If you wanted a 10% profit, you would use 110% as the markup. You can't leave this field blank or you will have no results. This driver will take the actual travel and entertainment expense and pass it to the client as pass-through revenue. You do not need to know what the actual expenses are to set up this driver. The system will automatically grab the selected ledger account's value. For this example, we will pass through the planned travel and entertainment account actual values. If we go to the expense web form that we already had opened and look for the travel and entertainment section, we see the values that will be passed through. Now go back to the pass-through special revenue driver web form and add a pass-through revenue driver. As when adding other types of drivers, we right-click, go to SmartView, click on Add a Row. You will need to select the Travel and Entertainment account. To quickly find the account, you can type the account name in the search box. Now we need to pick a driver number. Here we selected the first pass-through driver, which can be found under Total Drivers, Total Individual Drivers, Total Forecast Drivers, and then Total Pass-Through Drivers. Finally, we select one of the 10 available drivers. It doesn't matter to the system which driver number you pick, as long as you pick a number not already being used for this planning cost center account combination. It is good practice to select drivers in sequential order. After the row is created, you need to select your driver type. Select Existing Account Value, select Account. Then you need to select the account you want to pass through. So we look for Travel and Entertainment and hit Submit. You now need to review the values in the form. Driver rate P is 1, as multiplying by 1 does not change the account value. Next, look at the driver markup row. Here we entered 100%, also so we don't change the travel and entertainment value. If you want to change the account value, such as when you wish to add a 5% profit, use 105% as the markup value. We will now go over our second driver type for pass-through revenue, in which an account's quantity drives the value we will pass through. In this example, we will use the quantity of minutes from one of our existing revenue drivers to determine the amount of cost that will be passed through to our client and become pass-through revenue. We go back to the first web form we opened. Here we will find our already defined standard revenue drivers. We want to pass through the quantity of comprehensive support minutes, which is the first driver under external revenue. Our goal is to pass through 2 million minutes. To do that, you need to go back to the pass-through revenue drivers web form. For the sake of this example, we will put this pass-through cost in the consulting subcontractor expense account, but you can use any expense account. Go to the driver 001 row for pass-through revenue. Choose a driver type of existing driver queue, select account and driver. Click on Submit to validate your choices allowed on this web form. As you can see here, the field turned green, meaning it was validated by the system. Now you need to pick the account and driver number that will be the basis for your pass-through calculations. Go to the Driver Existing Account option and select External Revenue, Volume Recurring for Account, and Driver 001 for driver name. You should recall that this is the account name driver number combination associated with comprehensive support minutes on the standard revenue driver web form. Next, configure the driver resource. You can select from the list of predefined resource names. In this case, we select IVR. After that, you need to enter additional information so the system knows how many resources to use per transaction and what they cost. Since we have an IVR resource that is associated with minutes, you need to enter how many IVR resources are consumed per minute. In this example, we enter 0.01 on the driver resources per transaction row. 0.01 means for every 100 minutes, we use one IVR resource. Then we enter the driver rate, P, which is the cost of the IVR resource. In this case, it is 5 cents. Just like the other scenarios, we also need to enter a driver markup that is not blank. So we put in 100% to pass through the P times Q with no additional markup. Recapping, we have 0.01 IVR resources and 2 million minutes per driver 1's quantity from the standard revenue driver web form. So 2 million times 0.01 is 20,000. The cost is 5 cents. So 20,000 times 5 cents is $1,000. We pass through as is, so we need a value of 100% on the markup row. To see the calculated results of what we've done, we need to go to the Input and Adjust Calculated Values web form. This web form was already open, so click on Refresh to update the values. Freeze your panes to review the form in an easier way. Look at the external revenue pass-through row. Since we are working with 2017 for this example, we slide our cursor to the right. We see a value of $1,794, which, if you go back to the pass-through revenue web form, you see $1,000 from the comprehensive support minutes driver that was passed through, plus $794 from a previous driver that was on the form already. You can also see the totals on this form. The cost plus revenue works exactly the same. The only difference is the web form you launch, which directs the revenue to a cost plus revenue account. Open a new sheet, go to your task list, and select Create or Modify Cost Plus Revenue Driver. To add a row, right-click go to Smart View and select Add Row. Pick your expense account that will be part of the Cost Plus Revenue, and pick a Cost Plus Revenue driver. Notice the Cost Plus Revenue drivers have their own section. After you have added your row, you finish defining the driver exactly as we explained for the pass-through revenue. Thank you for your time and attention. Goodbye.